Good morning, everyone. My name is Michelle and I'll be your webinar moderator today. Today's webinar is sponsored by NatRed's Platinum partner, BP. NatRed members can save thousands per year with the highest fuel discount in the industry. Plus, Qantas Business Rewards members earn Qantas points every time you use your BP Plus fuel card. Start saving and earning today with BP Plus. Today's webinar is being presented by Nick Passalis. With over 30 years experience in the ATO, Nick is committed and passionate about improving the small business client experience and build positive engagement by offering tailored and easily accessible educational information that will assist small business to understand and interact with the tax and super systems more effectively. Like always, we'd love to hear from you during today's presentation. If you have a question, please feel free to type in your questions in the Q&A section at the bottom of your screen. So welcome, Nick. Over to you.
Thank you, Michelle, and thank you all for having me along this morning. As Michelle said, my name is Nick Passalis, and I work in the Australian Taxation Office based in Sydney. And I think most of you guys on the line are from New South Wales, so I hope you're staying safe and keeping well in these hard times we're facing during COVID. Okay, firstly, I'd like to respectfully acknowledge the traditional owners and custodians of country throughout Australia and the continued connection to land, waters, and the community. I'd like to pay my respect to them and their cultures and elders past and present and emerging. Okay, so on the screen now, these are the topics that I'll be covering today. So we'll go through some budget updates, some rate changes in tax and superannuation. We're going to look at taxable payments reporting system for the road freight industry. We're going to touch on what digital options are available for small business. And we're going to finish off with support for small business. As Michelle mentioned, if you've got any questions throughout today's session, I will answer them as quickly as possible, but I will have plenty of time at the end of the session to answer any questions. Okay, today's session is intended to provide you some general information. Ultimately, you should seek professional advice in relation to your specific circumstances. Unfortunately, I cannot give you specific advice in a public forum such as this. Okay, as you all know, on the 11th of May 2021, the budget for 2021-22 was released. A number of these measures announced as part of the budget are subject to receiving royal assent and are not yet law, including some of these that I'll be speaking about in today's session. Currently, the ATO are working on how they will implement and administer the tax and superannuation related measures. And the ATO will communicate more details with the public as they progress. Okay, over the last year, the government has introduced a number of temporary measures, such as accelerated depreciation, instant asset write-off increases, and temporary full expensing to help claim deductions on a depreciating assets more quickly. There are specific rules, eligibility criteria, and also timeframes for each measure. So I recommend you check with the website for more information. Which write-off you can use is affected by when you bought the asset, when you use the asset, your business turnover, which measure is in place, and which choices you make to opt in and out of a particular write-off. In the 2021-22 budget, the government announced that it will extend the temporary full expensive incentive in its current form for 12 months until the 30th of June 2023. Temporary full expensing allows eligible businesses with an aggregated annual turnover or total income of up to $5 billion to deduct the full cost of eligible depreciable assets. According to the last year's budget, assets must be acquired from 7:30 p.m. on the 6th of October 2020 and first used or installed ready for use by the 30th of June 2022. Now, with this extension, the assets must be used or installed ready for use by 30 June 2023. The 12-month extension will provide eligible businesses with more time to access this incentive, including projects that require longer planning and those affected by COVID-19 related disruptions. As part of the budget, the government have also proposed that the temporary loss carryback will also be extended by 1 year. This will allow eligible companies to carry back tax losses from the 22-23 income year to offset previously taxed profits as far back as 2018-19 income year. So companies with aggregated annual turnover of up to $5 billion can apply tax losses incurred during the 19-20 year, the 2021, 21-22, and now 22-23 to offset tax paid in the years 18-19 or later years. The tax refund will be available to companies when they lodge their 20, 21, 21, 22, and now also the 22-23 tax returns. This will help increase cash flow for businesses in future years and support companies that were profitable and paying tax but find themselves in a loss position as a result of the COVID-19 pandemic. Okay, for those of you that are employers, you may be eligible for the JobMaker hiring credit. It was a measure from last year's budget and is currently in operation. It's basically an incentive for businesses to employ additional young job seekers. So eligible employers can access a JobMaker hiring credit for each new job they create over the 12 months from 7 October 2020, for which they hire an eligible employee. This will be for a maximum claim period of 12 months from their employment start date. Employers can register with the ATO and make claims quarterly, with claims starting in February 2021 through the JobMaker hiring credit scheme. Eligible employers may receive payments of up to $200 a week for each eligible additional employee aged between 16 to 29 years old inclusive, or $100 a week for each eligible additional employee aged 30 to 35 years old inclusive. The employee's age will be based on the date they commenced employment with yourselves. Payments will be made in arrears following each JobMaker period. If you want to know more information about the JobMaker hiring credit, please visit our website and search for JobMaker hiring credit, and the whole eligibility criteria will list everything on the website. Okay, the 2021-22 budget also proposed a number of measures for superannuation. I also encourage you to check with the ATO website over the coming months if any of those reforms directly affect you as an employer or alternatively as a member of a super fund. One of the proposed measures I want to draw your attention to is removing the current $450 per month minimum income threshold. So currently, employees don't have to be paid the superannuation guarantee by their employer if they earn less than $450 per month. With this new measure, employees who earn less than $450 per month will be eligible for superannuation guarantee if they satisfy other eligibility requirements. So employees with multiple jobs no longer need to earn $450 in each job to be eligible for super guarantee. The measure will have effect from the start of the first financial year after royal assent of the enabling legislation, which the government expects to have occurred prior to 1 July 2022. I would also like to mention the changes to the super minimum guarantee percentage. So the current minimum super guarantee is 9.5% from July 2021. It's set to increase by 0.5% annually until 2025. So as you can see on the screen, for example, 21-22, which is from 1 July 2021 to 30 June 2022, it will be 10%. And following 0.5% increases up to 25-26 financial year, which will reach 12%. Okay, the last thing I'd like to draw your attention to, for those of you who are employers, is the stapled super funds. With this, employees will keep their super fund when they change jobs, stopping the creation of unintended multiple super accounts and the erosion of their super balance. A new super account will no longer be created automatically every time they start a new job. Instead, their super will be stapled to them so that they keep their current super fund whenever they change jobs. So as an employer, you'll pay your employees super to their existing super fund if they have one, unless they select another fund. If an employee does not nominate a super account at the time they start a new job, you as the employer will pay their super contributions to their existing fund. You will obtain information about the employee's existing fund from the ATO. If an employee does not have an existing super account and does not make a decision regarding a fund, you will pay the employee's superannuation into your business nominated default super fund. So has anyone got any questions so far? I don't know if there's any questions in there.
Hi, Nick. Yes, thank you. How does the single touch payroll system work for small business pays? And is there a penalty for not using that system?
Okay. The single touch payroll system is something that was introduced for all employers. And that is, it's a reporting system. So one of the biggest gripes we get from employees is, you know, they work with an employer for years and years, and when they finally leave, the employer has not paid any superannuation for them. So it's pretty hard to get back lost super. So the single touch payroll system has been brought in place where employers report to the ATO through accounting software. So if you haven't got accounting software, there is plenty of free and low cost accounting software out there. So when you pay your employees, so if you're paying them weekly, then you report to the ATO weekly exactly how much money they received in the way of salary and wages, how much tax withheld, and how much super you paid for your employee for that period. And then the super fund will report to the ATO if you haven't made those payments. So it'd be easier for us to track down employers a lot sooner. And it is compulsory, and there is penalties involved if employers are not using the single touch payroll system. Employees that are classified as micro employers, which is less than 4, I think they've got up to 1st of July to, they can have their tax agent report on their behalf, but you better check with your tax agent if that affects you. So hopefully I've answered that question.
Great, thank you. I have one more. If my workers are working under 2 awards in 1 week, i.e. they do both long distance and local work, how do I calculate superannuation?
Okay, so you as an employer, if you have got an employee under 2 separate awards, then that doesn't matter. It depends how you pay them. So if you're paying them all together, you still have to pay superannuation on each amount. So it doesn't matter how many awards they work under, depending on how much they earn each pay period, you still have to pay whatever percentage currently at 10% from the 1st of July. So 10% of whatever they earn every week, every fortnight, whenever you pay them. I would also like to let you know there have been changes to the lower company tax rate and the small business income tax offset rate. So the lower company tax rate for base rate entities reduced to 26% in 2020, 2021, and it will be 25% from the 2021-22 income year. A base rate entity is a company that both has an aggregated turnover of less than the aggregated turnover threshold, which is currently at $25 million for the 17-18 income year and $50 million for the 18-19 to 21-22 income year, or 80% or less of their assessable income is base rate entity passive income, such as interest, dividends, rent, royalties, and net capital gains. Also, the small business income tax offset applies to small businesses with turnover of less than $5 million. So the rate of the offset has increased to 16% from 21-22, and the maximum offset is $1,000. And the ATO will work out your offset based on amounts shown in your income tax return. Okay, now I'd like to talk about the taxable payments reporting system. So small businesses that provide road freight services and pay contractors for providing road freight services on behalf of their business may need to lodge a taxable payment annual report. Let's look why this reporting system has come about. So the thinker behind it, have you ever been offered a discount for paying cash? So cash payment is one of the major tax fraud means by dishonest or criminal businesses. So dishonest businesses who offer cash jobs likely don't lodge a tax return or report all their income. This means they're not paying their fair share of tax. So this is unfair to honest businesses that are doing the right thing. So I'd like you guys to think about how much money do you think is lost due to this type of activity every year? So do you think there's hundreds of thousands, millions? Actually, every year, billions of dollars are lost due to people who misuse or abuse the tax systems. Their dishonest behaviors are reducing funds for essential community services such as education, infrastructure, and healthcare. So by intentionally doing the wrong thing, they are potentially gaining an advantage over their competitors who are doing the right thing. So while their businesses succeed by not playing fair, honest businesses may need to make sacrifices to compete against them and may struggle to survive. Small businesses may go bankrupt because of reasons like this. They may suffer not only financially, but also mentally. Also, those same dishonest businesses may be more inclined to intentionally do the wrong thing in other areas of their business. For example, not paying their workers correctly. It is a misconception that businesses that are not doing the right thing are harmless. Businesses that operate outside the system and don't pay their fair share of tax affects all of us. This is real money the community is missing out on for services we rely on, like roads, schools, and infrastructure. By lodging the taxable payment annual report, you are playing a big part in helping keep the system fair for everyone, as well as protecting your business and the Australian community. Okay, so let's see how the system works. So the system is underpinned by you. So the honest business reporting data to the ATO. So the data you report is information you are already collecting as part of your day-to-day operations. If you are a contractor providing road freight services, the payments you receive may be reported to the ATO. Let's look at how the system works using an example. There are a few players in the system. So on the left here, there's the road freight and or 123 is a road freight services business. They are called the payer. They engage a contractor who's Phil Jamison. He is called the payee, and they pay him for road freight services. And of course, there's your friendly ATO. So, road freight and all 123 engage Phil Jamison for road freight services. Phil invoices road freight and all 123 for the services he provides. Road freight and all 123 pay Phil and record the transaction in their books or accounting system. At the end of the financial year, road freight and all 123 report to the ATO details of the total payments made to Phil, the contractor, in a taxable payment annual report. At the end of the financial year, Phil will lodge his income tax return. The ATO will check his return to make sure he has included the payments road freight and all 123 reported. This means the ATO can detect if Phil has not lodged tax returns or lodged returns that do not accurately report his income. The ATO will work with Phil to make sure he knows what he needs to do so he can participate and pay his fair share of tax. So this is just a general view of the system. There's obviously some variations, and we'll talk about them soon. So the taxable payment reporting system has a three-step process. In this session, I only have enough time to talk about step one, prepare. This involves working out whether you need to report. So for more information about the taxable payment reporting system and the other two steps, please visit our website, or my team also run a series of ATO webinars on road freight services. So if you want to register for an ATO webinar, go on our website and search for small business webinars. And we run over 40 different products. So I encourage you to register for one of those. Okay, let's work through step one. Let's understand what is meant by road freight services. So road freight services include transportation of freight, such as goods, materials, liquid, or livestock by road. So furniture removal services, road freight forwarding services, taxi truck services, and truck hire services with driver are some examples of road freight services. However, road freight services don't include services like passenger transport services, courier services, operation of road freight terminals, providing crating and packing for road freight transport, and leasing or hiring trucks without drivers. Even though courier services are not road freight services, if you are providing both road freight services and courier services, you must include income from courier services in the calculation to determine if you need to lodge taxable payments annual reports. Okay, contractors are those businesses you pay for road freight services. They are business to business transactions. They are not employees. This system does not include payments you make to employees for road freight services. A contracting business can be a sole trader, a partnership company, or even a trust, and you must report regardless. I notice there's a couple of questions in Q&A. I will get to those questions, so please hang on. Okay, a broad range of businesses that pay contractors for road freight services will need to lodge a taxable payment annual report. So this is Borjan's company, picks up and delivers bulk groceries from grocery suppliers to supermarket stores. All of his income is generated from transporting groceries, which are road freight services. Borjan will need to report payments he makes to his contractors for his services. Okay, Petra's company provides grocery transportation services and business administration services. Transportation services is a road freight service. Business administration services is not a road freight service. So not all of Petra's business income is generated by road services. In fact, generally the business admin service arm of the business generates most of the income. So does Petra need to report payments made to contractors if her business provides other services as well as road freight services? Well, it depends. Let's take a closer look at this. So this is one of the variations of the system I mentioned earlier. Like Petra, if your business provides mixed services, not just road freight services, you will need to work out whether you need to report. To help you decide if you need to report in the current financial year, you will calculate what percentage of the payments you receive are for road freight services. If the total payments you receive for road freight services are 10% or more of your current or projected GST turnover, you must report. When we say turnover, that means your gross business income, not your profit. So if you're registered for GST, it also excluding any GST you have included in sales to your customers. So going back to what I mentioned about courier services earlier, in this calculation, if you are also providing courier services, you will need to include your courier services income. Okay, now that we know this, we can work out whether Petra needs to report. So excluding the GST, Petra charges customers, the business admin services arm generates 65% of her business income. So the remainder is payments for grocery transport services. So the road freight services are more than 10% of Petra's GST turnover. So Petra does need to report payments made to contractors. Okay, so let's summarize who needs to report. It's very straightforward for businesses that provide only road freight services. If they pay contractors to provide road freight services, they need to report on the payments made to those contractors. If a business provides road freight services, as well as other goods or services, and pays contractors to provide road freight, they must have to report. These businesses will need to calculate their GST turnover, and if they're receiving 10% or more of their turnover from road freight, they will need to report on payments made to contractors. Okay. So don't forget, 10% or more is the threshold. Okay, let me just check the Q&A and see if I can answer some of your questions. Okay, one question is, the speaker said you pay 10% super on all monies that employees earn when answering the question on payments under awards, but this is not correct, surely. It's an ordinary time earnings, isn't it? Yeah, ordinary time earnings, that's correct. Ordinary time earnings, you're spot on there. So yeah, thanks for pointing that out. You're spot on. Is there an estimate of loss from road freight non-compliance from the TPRS reporting yet? It is quite new, surely. Yeah, it is quite new. I think the first time you need to report was this year. So there will be stats on that moving forward. So yeah, now that stat I mentioned earlier was a statistic based on cash economy industries. So industries that deal with cash. We're not saying that everyone that deals with cash are doing the wrong thing, but yeah, so that's why the TPRS system has been brought in. The building and construction industry need to do it, road freight, courier, all sorts of industries that deal with cash. So thanks for those questions. I'll get them out of there that they're done. Hopefully I've answered those questions. If I haven't, just put in further questions in the chat function. Okay, let's move on. So some small businesses may not engage contractors at all or may not engage contractors every year. If you don't have any contractor payments to report and you work in the road freight industry, you can let the ATO know by submitting an online form. This will allow the ATO to update their records and avoid any unnecessary follow-up with you. There are two options to do this online. If you're using MyGov or online services for business, you'll find the link to the non-lodgement advice form in the taxable payments annual report form under the lodgement menu. If you don't use these online services, you can submit the taxable payments annual report, not required to lodge form, which you can find on our website, or you can talk to your tax agent to lodge one on your behalf. Okay, let's go on to some digital options for your business. So digital services or systems will make it quicker and easier to manage your business information. You can access your information anytime, anywhere, on any device, sorry. I'll save your time and money as well. There are many online services and digital systems can help you perform your business activities, including activities such as marketing and sales, paying and receiving money, accounting and record keeping, right through to preparing and lodging reports to the ATO. For example, for paying your employees, you may want to check out software such as Smart Payroll, Payroller, and Cloud Payroll. For accounting software, Xero, MYOB, QuickBooks, Reckon and Sage may suit your business. If you'd like more information about the various digital services and systems available for business, you can attend the ATO webinar called Digital Options for Your Small Business. Again, if you want to register for any webinars, go on our website and search for small business webinars. We run webinars Monday to Friday, and digital options for small business is one of them. Okay, the ATO online services, such as online services for business, makes reporting easy. Most of your business reporting can be done using online services for business. It's a main tool for businesses to manage their tax and deal with the ATO online. It used to be called the business portal. That is now being replaced by online services for business. So you can do things like cancel or register for tax obligations, such as GST, pay-as-you-go withholding. You can lodge various reports, such as your business activity statement and taxable payments annual report. You can check your tax account balances. You can make payments using BPay, credit cards, debit cards. You can request transfers and refunds, and you can update your business details. And you can also send and receive mail through our secure mail service. Okay, in respect to other online support, tools and calculators, at the bottom of every page on the ATO website is a Contact Us link, and it lists the many ways you can contact the ATO. You will also find a link to all the online ATO tools and calculators to help you with your tax and superannuation queries. I don't have time to go through them all, but when you have time, check them out. Some of them may be really useful for your business. Okay, before we wrap up this session, it's important to mention that recent times have been really challenging for small businesses. So if you're affected by an event or disaster, such as a flood, bushfire, COVID-19, drought, storms, etc., there's no need to worry about your tax affairs right away. The ATO will give you time to recover and help you get back on track when you are ready. You can visit the ato.gov.au Dealing with Disasters webpage, or you can phone the Emergency Support Info line on 1-800-806-218 to discuss what support options are available for your circumstances. So that's an important tip here. If you are struggling to meet any of your tax and super obligation because of COVID-19 or any other disasters, please call us. We're here to help. And unless you call us, we don't know your specific circumstances. So please jot this number down again, 1-800-806-218. Please contact us as early as possible so we can work with you to find a solution. It's never too late to contact and ask for help. Also, the Ombudsman, Fair Work Ombudsman, and Australian Small Business and Family Enterprise Ombudsman have developed a tailored mental health coaching service for small business owners. So that's called New Access. It offers free one-to-one telehealth sessions with mental health coaches who have a background in small business. Okay, you can also connect with the ATO online through any of our social media platforms, Facebook, Twitter, LinkedIn, and we've got YouTube as well. So please connect with the ATO on any of those. And that brings me to the end of what I wanted to discuss today. I'll just check to see if there's any more questions. If there's any more questions, now's the time.
No more questions that I can see.
Excellent. All right. Well, just in summary, I'd like to wrap up and thank you for having me along today. I hope you guys, got something out of today's webinar. Everything I've discussed today is also on our website. So I know that tax and super information can be pretty dry at times and hard to take in. So everything is available. And as I mentioned, we do have ATO webinars that we run for any small business owner. So I encourage you to have a look at what products and topics we do have. If you do have any questions or queries, we do administer a mailbox. So if you do have any queries relating to your small business, get on SB Talk. So SB Talk at ato.gov.au. Send us an email and we'll see what we can do to assist you. Otherwise, I'd like to wish you all the very best. Please stay safe during these tough times we're going through. And there is support available, but you just need to reach out. All right, I'll hang on there. Thank you very much for having me. I'll hang on for a few more minutes. I'll stop talking. Cheers.
Thank you, Nick. And thank you everyone for attending today's webinar. The webinar will be uploaded to the NatRoad website and on our YouTube channel if there's anything that you've missed or would like to revisit. Thanks again.